Hello guys, so we are now in Singapore just before the week of Token 2049, and here with you Anna Tutova, co-founder of Cointelegram, and our guest Guy Yoon, who is founder of Ethena, and it's the fastest growing stablecoin which reached over $2 billion in TVL. Currently it's at 2.6 billion, and it's on the fourth place after Tether, USDC Circle, and MakerDAO DAI. So great to have you here, Guy.
Likewise, thanks for having me.
So can you tell us about your background? I know we're not really like a crypto G. You got in from TradFi a bit later, like around 2019. So Can you tell more about that?
Yeah, that's right. So I was working at TradFi, working at a hedge fund, which was looking at financial services mainly. So investing into banks, insurance companies, those type of businesses. Had a friend who's a DeFi founder back in 2019, and he introduced me to the apps that were being built on Ethereum. So originally it was MakerDAO, Synthetics, Aave, when it was called Lend. And he showed it to me one day in 2019, and I was immediately sort of like interested with what was being built there. Was investing into DeFi on the side of my day job during the last cycle, and sort of thinking about how I could get a bit more involved in the space professionally from then. And then I guess the genesis story behind when Ethena came out was actually just after the lunar collapse in 2022, when Arthur Hayes sort of wrote that piece about how we might think about a synthetic dollar that we could create within crypto that was disconnected from the existing system. And I read his piece, was inspired by the way that he thought about the vision, and quit my job to start doing Ethena. Yeah.
That's interesting. And did you hear before about Bitcoin, Ethereum? Or you just didn't really pay attention?
Yeah, no, I heard about it in 2017, but kind of looked at it and just thought it was a bit of a crazy bubble and never spent that much time.
So you even didn't invest back then?
No, I wish I did. Well, probably would have been down from 2017, but the moment I was hearing about it was definitely at the peak of the bubble in 2017. But to me, it was actually it was less about the thesis around Bitcoin and ETH that I found interesting. It was actually just more the financial applications that were on Ethereum originally. Because to me that sort of looked like the first real use case that was actually coming out of the stuff, that you could see how that market could get 100 to 1,000 times bigger than it was at the time.
So do you consider Ethena to be like a competitor to traditional banking system and traditional like US fiat bank system?
I wouldn't say like direct competitor. I just sort of see it as a complementary financial product that sits like alongside what you can get at the moment. I think one interesting piece about the evolution of the market structure since the last cycle is actually with dollar-related assets within crypto, users now have a bit more of an expressive risk preference to actually say, I want to have that type of exposure in terms of the collateral backing or yield profile across these different assets, where before, when rates were at zero in the real world, dollar-pegged assets were basically just zero yielding, and there's no real way to express a different preference. And that's something I think we've seen across the entire space now, which is you can get the USDC and Tether with like high liquidity but no return, and then there's some spectrum of like RWA-backed assets or MakerDAO who sort of sit in the middle between fiat stablecoins and crypto-backed stables like Ethena. So I think it's like a positive development. We're not really here to tell users this is better or worse for these reasons. I think our only job is to say, here are the risks, here are the considerations that you should have, and then give people the option to say, do those risks make sense, and do you want to participate in the product?
Ethena USDe synthetic dollar is backed by Ethereum and staked Ethereum. What is the collateralization rate, and what is the risk if Ethereum goes crazy down in the bear market?
So it's backed at the moment by a combination of Ethereum, as you said. Bitcoin is actually like a huge part of the backing now as well. And then there's a liquid cash buffer that sort of sits there as well to meet redemptions. There's also an excess piece of the collateralization that sits there, which you can sort of think about it as the excess returns that have been generated since Ethena's been out, which has gone to sit in this reserve fund, which is in addition to the collateralization. So at the moment, the collateralization is around 101.6%. So it's actually more than most like dollar-pegged assets that you see. And that's just as an outcome of during the times when the returns were so high on Ethena, you could actually take some of that excess return and put it in a rainy day fund for if that's not always the case going forward. I think the risks have been pretty well documented. They look very different to what you see with normal fiat stablecoins. I think the key thing to think about with any dollar-pegged asset is always custody. So where are the actual assets sitting? Because if something goes wrong with that in some way, that's when you're going to lose a lot of the backing behind a dollar-pegged asset. And so really all we've done is transform the custody exposure from having assets sitting within the US banking system, which is where most of the fiat-backed stables have their assets, to custodians sitting within the crypto ecosystem. And there's, I think, a bit of a debate between like purely decentralized offerings which have the collateral sitting within smart contracts on chain. Yes, it's nice for some aspects of decentralization, but equally I think with the hacks that we've seen within DeFi, there's an argument to make that actually leaving your assets with custodians is a safer place to have them. So from our perspective, it's sort of an interesting piece of that trade-off spectrum, I think, where it's not perfectly decentralized, it's not perfectly permissionless in terms of the actual underlying assets, but we think having those assets with custodians is a reasonably safe place to have them.
Yeah, and you recently made as well partnership with Solana, so is Ethena backed by Solana now too?
So yeah, that's something that's coming soon, and it needs to go through a governance process at the moment. But yeah, I think one of the exciting things that happened over the last year was definitely the emergence of Solana. I think a lot of people had written it off at the end of 2022 and beginning of 23, and just the real sort of criteria that Ethena has in terms of what are the assets that are coming in is basically, is there a deep derivative market that sits around the assets? So at the beginning of 2023, Solana was just nowhere near big enough for us to build a product like Ethena around that asset. And it sort of reached a threshold, I think, in the last year as it obviously ran up significantly, where that sort of makes sense from an engineering and integration perspective. So I think we're super excited. I think a lot of the net new things that you're seeing with dollar issues is all actually coming on Solana. So PayPal's been pretty aggressive in terms of their growth there. You've seen payments use cases emerge with Stripe and PayPal actually announcing on Solana as well. And so I think you're going to see a bit of a bifurcation in the market where high-value dollar assets like you see with BlackRock's Biddle Fund probably has like a home and a house on Ethereum, and then some of the higher velocity type transaction-based stablecoin use cases move a bit more to Solana. And we don't want to be opinionated around where users should be operating. I think we had a bit of pushback actually where we're obviously quite ETH-aligned in the beginning when we came out, and people are saying, why are you going to Solana? What are you doing here? I'm pretty strongly of the view that we as builders should not be opinionated or telling users this is where you need to be. Our only job is to listen to where users actually do want to be and where they demand the product and go and deliver it to them there. So we don't have like maximalism around where we are. We just want to be neutral and sort of provide the product where it's demanded.
And do you plan any other partnerships with other chain tokens and to use them as collateral?
Yeah, I think on the collateral side, Solana is basically at that threshold now, and everything else is just too small. That might change, like in the same way that we dismissed Solana a year and a half ago. That's obviously changed, and I'm sure there's going to be another emergent asset of that size that comes through in the next few years. In terms of chains where I think it's particularly interesting, there's going to be an announcement that's out this week, which I can probably start to share now, just if it's airing a bit later. Just around TON, so I think we're pretty excited about.
Yeah, I wanted to ask about it.
Yeah, so I think, I mean, the thesis and like the narrative there is obviously very clear, which is you've obviously just got a completely unique user base that sits there, and like the distribution that exists with TON is super interesting. To me, I think the maturity of their system right now reminds me a bit of like Solana when it first came out, where there's a very clear use case of how you can see the demand on this chain being 10 to 100 times higher than it is now in the next few years, but it's still quite nascent in terms of like the apps and the assets that are sitting on there. So I think from our perspective, we take one step back and sort of, there's a meme about how do you get 1 billion people into crypto, what is a product that 1 billion people actually want to use, and to me that actually just looks like having $1 in your wallet and being able to hold $1, spend and send a simple $1 in your mobile wallet is actually an extremely simple but compelling product that most of the world actually wants access to. And so from our perspective, moving away from a bit of like the financial degen type crowd in Ethereum and actually just trying to provide for low wallet balance users that are existing on TON, for us is a super exciting sort of like customer growth area.
Yeah, that's awesome. And as well, you have USDe yield generating stablecoin, and many compared you to Terra Luna and expressed some concerns with Terra Luna because you had like quite a high yield, 23-27%. Currently, we are in some kind of in the drawdown. We in some kind of bearish market. You have just 4.5%. So how does this market influence you, and Do you see that a lot of people withdraw their assets and don't really, use less USD and Ethena?
Yeah, I think the product was always going to be super reflexive to the cycle conditions. So in the same way that we were coming out and saying when the yields are 20 or 30, this is just a market set interest rate, and like at the moment it's high and in the future it's going to be lower again. This is just market forces like doing what they do. I think from our perspective, the reason why we have confidence that this is a sustainable product is that we're never telling people this is a fixed yield or we're committing to this level forever. All we're doing is saying there's a market set interest rate. We're providing the infrastructure for people to get in and access that when they want and get out when they don't want it. And so yeah, naturally, obviously the market's cooled off in a bunch of different places, and like the demand for leverage within crypto has obviously declined massively. But I think it's been a great demonstration in the last few months, which is a lot of people thinking that this is going to blow up in the beginning, they're not going to be able to handle withdrawals. We processed over $800 million of withdrawals in the last few weeks, and I hope it's sort of demonstrating to people that actually this is a multi-cycle, resilient product that can actually handle that type of flows both in and out. And so this was always going to happen where you have cooling off periods in the markets. They don't always go up. And we hope that this is just a demonstration to our users that this is a reliable product that's going to be around for a while.
And how do you retain users when other protocols as well offer like pretty same yield?
Yeah, I think it's again just building trust with your users and like making sure that they understand these are cyclical markets, and so when things come down, there's going to be a moment where it comes back up again, and we're obviously open and wanting to have those customers come back when that makes sense. So yeah, I don't think there's anything special that we can do where you've got to accept sometimes that some things are outside of your control. Like we can put the plumbing in place for new initiatives on new chains, putting it as collateral on different exchanges or whatever it is. We just need to make sure that we're continuing to build the groundwork so that when the market does come back, you're in the right position to capitalize on that. And yeah, you can't lose hair over things like where market set interest rates are. That's just something that's outside of our control.
And how do you see as well regional adoption of your product? Where do you see the most activity?
Yeah, I think the one that we're probably the most excited about is using it as collateral on exchanges. So I'm a pretty firm believer that actually you've got so many different use cases now for dollar-pegged assets within crypto. Like originally it was just a trading instrument to get in and out of from BTC and ETH in the beginning. It sort of transformed a bit to like a store of value for people in developing markets that didn't have access to the US financial system. And then we've seen payments use cases emerge, and then like collateral within DeFi. There's really different segments that you can play. For us, we wanted to be very specific and say, where is it that we're actually better than the competition, and like really nail down and ensure you're doing that and winning in that subcategory. So for us, actually, there's about $30 billion of tether demand, which is just used for derivatives on exchanges, i.e. put down collateral to trade those derivatives. What's compelling about Ethena's product is that you can obviously try offset some of your costs that are associated with that by getting a yield on the collateral that's sitting on there. And we launched something with Bybit, which now is sort of the second largest exchange when it comes to the derivative volumes. And within a month, we had the supply of USD on Bybit go up to 440 million. So that was actually larger than the USDC balances that sat on Bybit from USD in 1 month. Which to us is like a strong indication that when the conditions are right, this product is extremely useful on those venues. So for us, it's just thinking about what are the next exchange venues that we can start to put this in place. And I think that for us, the DeFi growth story in the beginning was powerful, strong, like quite aggressive. But the bigger opportunity for us is using that as a stepping stone to then get collateral on exchanges.
And as well with the campaign on Bybit, there is offered 10% yield if you hold USDe. So where is that yield coming from?
Yeah, so it was a promotional campaign between us and Bybit. So yeah, it's something that we'd put in place or agreed a few months ago, and sort of take time to come through into the market. But yeah, it's a combination of like the cash and Ethena and Bybit. Yeah.
And can you explain your business model?
Yeah, it's a pretty simple one. So there's a return that's generated by the protocol in total. So normal fiat stablecoins generating 5 to 5.5%. Some of them pay out somewhere between 4 to 4.5. People like Tether keep the whole 5%. For Ethena, it's very similar, where there's a more fluctuating yield, so it's not as like firm and set at 5. But there's a percentage that sort of goes back to the protocol, and then the rest is basically paid through. So how much does go
back to protocol, and how much do you pay to the users?
Yeah, it's roughly around 20%. That fluctuates as well. But in the beginning, it was a much higher percentage as we're sort of like rolling out the product. But now it's sort of steady, and and settled something close to 20%.
So 20% it's to the users, right?
20% to us and 80%
okay.
to the users. So yeah.
Nice. And as well, can you explain as well how does your yield works with your short positions?
Yeah, sure. I guess the intuitive understanding of this is people generally want to be long in crypto, and so they think the market's going up, and it usually costs more to get long than it costs to get short. You can just sort of think about the perpetual funding rate as just an expression of what is the market set interest rate for demand for leverage in the system. All Ethena is doing is basically taking BTC and ETH and saying, you want to go long, I'm going to provide the capital on the other side to be the short position, to be against your long. And in return for that, in general, you get paid an interest rate from traders on the other side. So that usually this year is averaged around 15% for that number. It was obviously much higher in the beginning of the year and much lower now. And yeah, the intuitive reason there is that there's just a demand for leverage, and we're just supplying capital to meet that demand.
And what's your aim with Ethena? Do you aim to become bigger than Tether, than USDC Circle, or do you consider to be the stable coins in some kind of different niches?
Yeah, I don't think we can ever get to that size, to be honest, but that doesn't mean you can't be huge. So it's one of the interesting things about the dollar market, I think, within crypto is that it's growing and continues to grow, and it's clearly got product market fit outside of just pure speculation. So our view is that it's sitting at around 170-ish billion right now. That number's going to be closer to $1 trillion in the next 5 years. And so for us, it's actually circling back to one thing I said earlier, which is we don't want to be everything to everyone and be the biggest out of everyone. We want to pick our niche use cases that we know that we can win within those use cases and really be the best within that subcategory. And so for us, I think something in the number 3 to 2 range is kind of the ultimate goal. And there's a bit of a constraint around how big can Ethena get, just because of its reliance on crypto infrastructure rather than just T-bills, which is basically infinitely scalable. So yeah, I think the goal is much bigger than where we are now, but it's unlikely to ever get bigger than those two.
Yeah, and as well you mentioned another use case, crypto payments. So do you see whether Ethena USDe is used for the crypto payments, or is it mostly a savings product?
Yeah, I think it definitely falls more into the sort of collateral and savings product. There is interesting infrastructure now which is allowing you to connect basically any crypto asset into paying at a merchant. So you can hold USDe, for example, tap with a card, which basically in the background is swapping into USDC, which the merchant is accepting on the other side. So there's a bit of a fee friction there for you to be able to do that. But that type of plumbing actually exists right now and allows you to do it. I think the more difficult piece is no one's ever going to come and use Ethena's product in a Stripe or a PayPal type when USDC exists there. It's just something that they've been working on for the last 5 years plus in terms of building those BD relationships, building the brand and sort of awareness and trust around what they're doing. And I think ultimately those businesses are always solving for reliability and trust over some sort of return, which is totally understandable. And again, I think that this is one of those moments where you just have to say, are we going to be better at Circle for that specific thing? Probably not. And so, yeah, we have access for crypto users to be able to spend in the real world using this card infrastructure, but we don't have ambitions to try and beat the BD to get a Stripe or something as the core use case for USD.
And as well, can you tell more about your recent partnerships, for example, with EigenLayer? You're the first security token, so can you explain what does it mean?
Yeah, I think this is a pretty exciting one for us, which is restaking has obviously been one of the bigger narratives and ideas that have come out of the cycle, and I think it's probably one of the most interesting new concepts that have been brought to market. I think just at a very high level, 2 sort of potential issues that we see with restaking in general. We have one, which is not everyone wants a volatile asset to provide security, so I sort of think about restaking in a similar lens to just basic financial insurance in the real world, where all of that is run on dollars, and it makes sense, right? When something's going wrong, you don't necessarily want a volatile 100 volatility asset. You kind of just want dollars to be able to remedy whatever issue there is. And so we think that it's actually a more natural asset to have dollars instead of ETH sitting within the system. The second piece is around the embedded return. So I think one issue that's going to start to surface soon is a lot of the return that's being generated on LRTs and ETH restaking is basically token inflation. There isn't real cash flow being paid to service that interest rate. While obviously USD and SUSD have an embedded real return that's sitting in there. So your ability to bridge the cost of capital between people who are providing the asset and then consumers of security on the other side, that's actually remedied somewhat by USD's embedded return. And so for us, super excited to be working with them. We think there's a bunch of use cases that haven't been fully explored where dollars make more sense than ETH. And yeah, I think there's a bunch of new areas we're going to be working with EigenLayer to sort of build that out.
Yeah, that's cool. And as well, do you yourself use a lot of DeFi protocols?
Yeah, I mean, before Ethena, I was kind of a power user, using it pretty much every day. I think that was part of our go-to-market was quite crypto native, so we were, they're integrating with different apps, understanding how different segments of the market sort of respond to things in a pretty good way. And so I think that came from being users of products and understanding how you sort of feel as a user sitting on the other side of these launches. So yeah, I use DeFi most weeks, to be honest.
So what are your most favorite DeFi protocols?
For me, it's probably Aave, and then I use a bit of perp trading on Hyperliquid, but also do that on centralized exchanges as well. And then very basic swapping in aggregators that sit on chain. I would say that I use DeFi less than I did back in 2020. I think that there's less innovation that we're seeing now than what was happening back then. And people are like, in the beginning, they didn't fully understand the money games that were going on in DeFi, how like yield farming worked, how you were just like constantly on the losing side of the game, providing liquidity and that kind of stuff. And so I think now participants are just less willing to engage with these sort of DeFi games on chain, and so it's a little bit less exciting than it was before. But I think, yeah, there's basic functionality, especially I would call out Aave as something I use like pretty often, yeah.
And do you invest as well into a lot of altcoins?
Not a ton, to be honest. I think I'm so busy thinking about what's going on with Ethena and making sure that that goes well. I don't have a lot of time to be trading around altcoins. I had a little bit of exposure at the beginning of the year, but for me, it's basically more than 80% just holding Bitcoin. Yeah.
And Ethereum and Solana, I guess, too.
Yeah, a little bit of Solana. I think now I think after the amount that it's moved up, slightly less confident that it has that sort of same trajectory going forward. Yeah, it's funny. I think this cycle I've become a bit more of a Bitcoin maximalist, I think, as things have sort of developed, yeah.
So in percentage, how much do you have backing of Bitcoin, Ethereum?
It's roughly 50-50 at the moment, yeah. Yeah.
And as well, can you tell more about your governance token, about Ethena? What is it used for?
Yeah, sure. So I think that this has sort of developed as we've come out. So on one hand, you could have staked it basically to increase the amount of ownership you'd have in Ethena based on your percentage holding of USDe. So the idea there was sort of like aligning the growth of USDe to Ethena, the token. I think one thing that we came out with a couple of months ago, which is exciting and is like sort of the first step of where we want to actually take this in the long run, which is having actually Ethena as a restaking asset and having that get paid tokens by other things building on our network. So if we just take one step back and ask ourselves, what do I actually think is the ideal token model, the best one that sits out there? I think my answer is actually BNB. I think that the BNB token model is super interesting, and for one reason, which is when tokens are launching on Binance on the launch pool, they give a percentage of their token supply to BNB holders, which gives you like an implied, this year has been running north of 50% APY on BNB. Why that's interesting, I think, is because you've sort of turned your platform into something that other teams will sort of give economic value back to. And that's sort of the vision of where we want to take Ethena as a platform where people are building on USD as a core asset. And to the extent that Ethena is helping these projects sort of get from 0 to 1, they're giving some of their token supply back to staked Ethena holders in the future. And so the first one of these, which is going to be coming out, is something I wrote about in May, which is the idea of a DEX that's connected to Ethena. And so Athena's ability to bootstrap a new exchange by providing liquidity from day one to get it up off the ground is pretty compelling, just in terms of providing liquidity and getting scale for this exchange.
So where do you get that liquidity which you will provide to the exchange?
Yeah, just the backing behind Ethena, right? So because now we have exposure to Binance, Bybit, OKX, whatever it is, we can be quite supportive of new exchanges that are coming off of zero.
Okay, so you can make as well short positions on decentralized exchanges, and that's your plan?
Exactly, yeah. And in return, it's sort of like a really nice symbiotic relationship where we're helping bootstrap them and provide them growth. And then if it's successful, that value sort of flows back to Ethena holders, yeah.
And as well, from your day-to-day work on Ethena, you see a lot of on-chain activity and different markets movements. So how do you see the current state of the market, and when do you expect we will finally see the bull market again?
Yeah, I think it's been a pretty strange cycle. I think everyone thought it was a full bull market at the beginning of the year, and then I think the ETFs had a bit of a distortionary effect on the whole market where we sort of ran the cycle a little bit, and I think people got too excited at the beginning of the year. I think we've got two obvious catalysts that they sort of come through. Obviously, the election and then interest rate hikes are like two ones that people are watching. And so I think there's a decent chance that, like, looking 3 to 6 months ahead of where we are now, the markets are much higher. But I think it's very dependent on those like pretty binary outcomes in terms of how monetary policy and politics sort of evolve in the US.
Yeah, and as well, do you have a lot of institutional investors, users at Ethena?
We do, yeah. So Fidelity and Franklin Templeton were investors into Ethena, and we've had some partnerships with some of those other big asset managers in terms of like our exposure to some of their products. It's an area that I'm quite excited about, which is when rates start to fall in the real world. So whenever interest rates go from 5 to 4 to 3, we actually think the yield products within crypto go in the opposite direction because demand for leverage in crypto increases, and your ability to actually package up this yield and actually export it out into traditional finance as a single-click access to safe and secure crypto yield in a dollar format. That's a pretty compelling product that a lot of people, there's trillions of dollars of capital that's in fixed income waiting to access that. And so, yeah, I think they've all been through a process this year, getting more comfortable with ETFs, integrating more into the system. And for us, that's like a huge area that I think comes after centralized exchanges, which is providing those type of entities access to crypto-denominated yield. Yeah.
So do you have now more capital from institutional investors, or is it mainly retail?
It's definitely a mix of both. So there are very large entities in TradFi that do have exposure to Ethena now. But there's also a huge cohort of retail users that got access as well. Yeah.
And how do you see the developments? Whether it will remain like still equally, or whether retail or institutionals will dominate in the future?
Yeah, I think that's the funny thing about the product, right? Which is something I was saying earlier, which is a dollar with a yield is something that applies to everyone in the world, right? Whether you're an institution or just like a retail user. So I don't have any firm views around how that changes now going forward. I think the institutionalization of the space might mean that you just see more institutions that weren't touching it coming in and then getting more exposure through that. But equally, there's avenues like the Tom piece that we were talking about earlier, where if you get real access to hundreds of millions of people through avenues like that, it might totally change the look of it. So we're here wanting to sort of serve users from all sides. And I think the nature of the product is that it appeals to a very wide range of people if you do it right.
And in your opinion, what do we need for the mass adoption?
Just better products, I think. Yeah, I think it's an easy thing to say. People say it the whole time, but there hasn't been a lot of compelling new things that people look at in the real world and say that this is a feature parity or at least improvement to what we see there, and I'm going to come on chain and use something relative to what exists in there. I think it's also probably not like a politically correct thing to say, but the price sort of also leads interest a lot of the time. So when things go up, more developers get excited, they come to the space and they want to get involved. And then there's retail interest, which is sort of like auto-correlated to price as well. So sometimes all it takes is a bit of excitement in price and we start to see that stuff come out.
And do you think currently you have more sophisticated retail users? Because I guess for average person it will be a bit complicated to understand all that collateral backing, where yields come from, and etc.
Yeah, I definitely would say they're more on the sophisticated side, yeah. Which I think is right. I think one thing that was done poorly last cycle was perhaps misrepresenting or not being as clear around what are actually the underlying risks behind things and making it too simple when it's presented. So I think this is one piece of feedback which we had, which was we're almost too transparent around all the like risks that's out there, and people were saying like, you're almost fudding your own product to the extent that it was coming out. But we thought that that was important, that at least you put that out there, so if people did want to get that information, they could. Yeah.
So do you have any strategy how to educate just average audience and to attract them as well to use your USDe?
Yeah, I think, well, I mean, even things like this, just getting out and educating people about how it works and why it's been safe through the last year, I think obviously helps. I think it's also just a matter of time also, because I think we're quite impatient within crypto. We're expecting always something to be 0 to 100 like instantly. Yeah. And sometimes you just need time to be able to get people comfortable, see how it performs through time, to be able to come in. So yeah, I think we just need to keep our heads down, continue sort of building users' trust and making sure that nothing goes wrong. And I think with time, that sort of thing comes along.
And as well, do you have any expectations for how long then next bull market will last?
No, I don't have any differentiated view there. I think one thing that might look slightly different to last cycle is that we've never really had a crypto bull market when interest rates are at north of 5%, and there's obviously just a lot of room for that to fall down over a long period of time. So we might see something that's a bit more extended, but not as quite violent as we saw in the last cycles, where things sort of just grind up, where you have passive flows from ETFs, gradually decreasing interest rates and increasing quantitative easing. I think that might lead to a cycle that's maybe not quite as sort of pump and dump as we've seen in previous ones, and maybe just a bit more extended because of that dynamic. But again, there's no data points for us to look at and say this is what happened. We're sort of operating just on pure speculation there.
And do you have any investment strategy? Want to fix your profits? Want to sell part of your Bitcoin or Ethereum?
Nothing that I feel qualified enough to give people advice. I think generally, if you're taking screenshots of your own portfolio and sending it to people to brag, that's like a pretty good time to take some money off the table. It's just very difficult, right, within crypto. Like, the optimal move is to always counter your exact emotion you're feeling at the time. So the moment you feel like giving up the most on like an altcoin that you're holding or something that's the most down, that's generally kind of when you actually have to be like going more into it. And I think the moment where you feel the most bullish and the most euphoric is kind of when you have to take chips off the table. Much easier said than done there. I think people talk about it, but not a lot of people do it.
Yeah, and can you share as well some upcoming plans for the development of Ethena?
Yeah, I think I had a roadmap piece that we put out a couple of months ago, just thinking about how we build an ecosystem and sort of apps that come on to build on USDe as a core asset. So yeah, really for us, it's trying to move from a single asset issuer with one product into more of a platform that people can actually build net new financial primitives on that idea. And so yeah, something coming out at the beginning of August is basically a new application that's going to be building on USDe, and that's an exciting thing that we're wanting to come out.
Yeah, that's great. Thank you for sharing your thoughts with us, and thank you for the interview.
Yeah, thanks for having me.